Hello everybody! Today's video, we will tackle about the fundamentals of taxation. Taxes are essential component of modern society since they secure the financial resources through which a given community funds its essential functions. So first, we will talk about what is tax. Tax is defined as a compulsory contribution charged on persons, property, or business for the support of government for economic and social operations. In other words, it is money paid to a government to fund its programs and services. Next is what is the nature of taxation. Taxation is a state power exercised through the country's legislative body. This means to impose costs on individuals and objects under its control in order to raise funds to carry out the government's lawful objectives. The principle of taxation states that taxes are collected to support the government in its expenses and services for public welfare. This means reciprocal duties of protection and support between the state and its citizens. The Constitution also states that revenues through taxation must only be used for government operations and for public welfare. So what are the purposes of taxation? The purpose of taxation is to raise revenues from all possible sources to support government expenditures and services and to promote the general well-being and protection of its citizens. It also safeguards newly opened industries to pioneering and new industries and other enterprises. Taxes also shield domestic producers by charging a much higher custom duties on imported goods. Following the principles of taxation, it referred to the basic principles of a sound tax system which identify the following. First, the fiscal adequacy. Second is the administrative feasibility. And lastly, the theoretical justice. So first, the fiscal adequacy. Taxes collected by the Bureau of International Revenue or BIR must be sufficient enough to fund the necessary government expenditures and basic services in a given fiscal year. It means that the sources of revenue taken as a whole should be sufficient to meet the expanding expenditures of business conditions, export, trade balances, and problems of economic adjustment. Second is the administrative feasibility. This principle suggests that in a successful tax system, such tax should be clear and plain to taxpayers, capable of enforcement by an adequate and well-trained staff of public office, convenient as to the time and manner of payment, and not unduly burdensome upon or discouraging to business. Administrative feasibility assures us that the tax system should be as simple as possible, clear, concise, and capable of enforcement and convenient as to time and manner of how taxes are assessed, collected, and comply with. Third is theoretical justice. It means that taxes charged must base upon the ability of the citizen to pay. Justice and equality are vague terms. They are furthermore relative to popular concept of justice which prevails at any time and place, or as we say, ability to pay principle. Next is the basis of taxation or the foundation of taxation. First, the Constitution, where it is the fundamental law of the land, means it's established the structure, policies, rules, and duties of the Philippines government. Second is statutes, laws passed by the Congress or presidential decrees. The third one is Bureau of International Revenue Rules and Regulations, where BIR rulings are the official position of the Bureau to queries raised by taxpayers and other stakeholders relative to clarification and interpretation of tax law. The fourth one is judicial decisions on tax cases by the Supreme Court. Fifth is provincial, city, and municipal ordinances. An ordinance is a law passed by a municipal government. Next is observance of international agreements. And lastly, administrative rulings and opinions, where it issued by governmental agencies that have been granted judge power or a decision-making power by an act of the U.S. Congress.
First of all, hi everyone, I'm Joseph Quilo, the continuation of objective taxation. And what is objective taxation? The basic objective of taxation is to raise resources for the state. And first is individuals who earn a considerable amount of income as a worker or as a businessman in a partnership or corporations including those who inherited a property or a given gift or donation of considerable value. Like for example, personal income includes compensation from a number of sources, including salaries, wages, and bonuses received from employment or self-employment, dividends, and distributions received from investments. And next is tangible and intangible properties with their personal properties. Tangible assets are the main type of assets that companies use to produce their product and services. Like tangible assets form the backbone of the company's business by providing the means by which companies produce their goods and services. And the example of intangible assets is the type of business property that has no physical form, including copyrights, patents, and trademarks. And they have value to your business not only because you can use them for profit, but because you can deduct the cost over several years as a way to cut your tax bill. And next is transactions, consumptions, interest, imports, and exports. So for me, imports leads to an outflow of funds from the country, since import transactions involve payments to sellers residing in another country. And exports are goods and services that are produced domestically but then sold to a customer residing in other countries. And situs of taxation. Situs is a Latin term for a place or location, but it refers to the place where taxes are to be paid. And first is income tax. Income tax is paid either in a place where the income is earned or the place of residence of the taxpayer. Income tax is used to fund public services, pay government obligations, and provide goods for citizens. And next is real property tax. This is paid where the property is situated. This real property tax is a tax on the value of the real property a person owns, and this is a form of ad valorem tax based on fixed proportion of the property's value. And the next one is personal property tax. Taxes on the intangible properties are paid in the place where the property is located, similar to real property tax, a form of taxation in what is termed personal property. And personal property is defined as a movable property that is not attached to a home or a building, and the requirements for personal property tax vary from state to state and mostly affect business. And last is business and occupation taxes. This is paid in the place where the business or occupation is located. And next is limitations of taxation. So, what is limitations of taxation? Is the inherent limitations are rooted in the nature of taxation itself, and these are the limitations that are not affected by changes in the provisions of the constitutions. First is the tax revenues must only be used for public purpose, and they cannot be used for purely private purposes for the exclusive benefit of private persons. And the reason for this is simple: the power to tax exists for the general welfare. Hence, implicit in its power is the limitation that it should be used only for a public purpose. And next is there should be proper delegation of legislative power to tax. So the process of delegated legislation enables the government to make a law without having to wait for a new act of parliament to be passed. Further, delegated legislation empowers the authority to modify or alter sanctions under a given statute or make technical changes relating to a law. The third one is government entities are exempted, and most state and local government entities are not required to pay federal income tax. For non-tax reasons, though, government entities are sometimes asked to provide a tax exempt number or determination letter to prove their status as a tax exempt organization. And the fourth one is there are territorial jurisdictions. So territorial jurisdictions is the court's power to bind the parties to the action, and this law determines the scope of federal and state power. And the last one is there's an observance of international law.
Double taxation occurs when an object of taxation was levied with two or more taxes from a single tax basis. First, direct duplicate, same income taxed twice. Second, indirect duplicate, taxes that are paid by the same individual or corporation based on two or more different taxing bases. The question of government taxing itself. The government may be taxed if it derives profit in the exercise of its proprietary capacity and not when the revenues were gained from the exercise of governmental responsibility. The government functions in its governmental capacity when it serves the people and delivers basic services for them. The government acts in its proprietary capacity when it functions for profit. Avoiding taxation. These are the other concepts related to taxation in terms of avoidance or non-payment. First, shifting. This is the passing on of the tax burden from one person to another. Second, capitalization. This is done by reducing the price of a taxable product or service to lower the tax that will be imposed on its consumption. Tax avoidance refers to the availing by the taxpayer or legally allowable means in reducing or minimizing the tax due on certain properties, items, and services. Tax evasion refers to the use by the taxpayer of illegal means in escaping, defeating, or lessening the tax due. And last is tax exemption. The bestowal of immunity by the taxing authority on a taxpayer from the obligation of tax payment.